here's Jay Kale from Elara Capital talking about the impact of Trump easing on the auto tariffs and what might the implications be in the short as well as the medium term on both the demand as well as supply constraints.
From a medium-term perspective, not only for auto tariffs, but overall because of the other tariffs across sectors, you will see inflationary pressures in the US. And mind you that, a couple of months back, it was only the US that was expected to give a strong growth in terms of the guidance for many of the OEMs, whereas other regions were expected to be weak. Now, even US is expected to falter. There's no going back on slowness or slowdown in demand in the coming months because you will be still having some bit of cost pressures, supply chain pressures, disruptions in that. And the suppliers effectively will get hit more by demand slowdown than individual company tariffs because it differs from supplier to supplier, component to component, and OEM to OEM based on their localization efforts. But as a overall, if I have to look at, definitely we are headed for much more pressures in the US market in terms of demand slowdown.
We continue to focus on international business. Okay, and as we had communicated in the past, our share of exports business on our revenues currently hovering around 20%. Our endeavor is to take it to 25% in a 2-year kind of a time frame. In the year that went by, in FY25, international business grew by about 8.5%. Okay, going into the current year, we do see double-digit kind of a growth. Overall, CEAT grew in double digits in full year, and also in Q4 we grew by about 14%. We would like to see some momentum in the international business from the current quarter. We had some challenges in the previous financial year with respect to availability of vessels, availability of containers on time. That had some impact on our revenue, but otherwise we grew strongly at 8.5%. We look forward to a double-digit growth in FY26. So we see a mid-single-digit kind of a growth possibility in the coming year. And we hope, in addition to that kind of a volume growth, we hope to get some price growth with premiumization and with some selective price increases. We hope to see a double-digit kind of a growth going into FY26 and overall at revenue level.
All right, so that was the management of CEAT. The stock has gained almost 9% in trade right now after a strong management commentary. And not just CEAT that is gaining trade, other counters within the auto pack like Apollo Tyres and Balakrishna, they are also holding on to the gains of 3 to 4%. So definitely CEAT has been setting the trend for the tyre companies for now.
If you like this video, then like, share and subscribe to ET Now.